Okay, so what we're doing here is we're just making a transfer posting from the qualities inspection stock to the unrestricted. Okay, so we just started that earlier, and here if I used MyGo, used A08 transfer posting and others, enter my material number, and out of the total quantity 101, I said I want to do for 50. And once you're done, make sure you select the OK button here, and also enter the storage location and click on check. Okay, so just make sure you select the right plant and storage location. 1000 is the plant which is linked to 001 storage location, so use that, and saying enter a vendor. Okay, so just enter the vendor that we used earlier for the purchase order. So 100 501, enter. Okay, now we'll check it again. Click on check button again. Okay, so it's showing you the green light. That means everything is okay. So what we're doing is we just posting 50 pieces from quality inspection stock to unrestricted stock. Okay, so here once you've done the check, then click on post. It will do the posting and it will generate a material document number. So you can see it generated a material document 4900002081. Okay, and I can tick on that. I can copy that number and here if you want to see this document, you can go to display material document, that one. It will remember the last document, press enter, and it created a material document. Okay, now the point to be noted here is, in this case, if you go to the FI document and click on here FI document, it will say at the bottom no subsequent document found in accounting. Okay, what does it mean? Why it didn't create any document? It will only create document when you're doing some sort of good receipt from the vendor and all that. But this time what we're doing is we only transferring the stock from one type to other type. That's why you don't need any material document, because still here is also the company asset, here is also the company asset. So you're just changing the type of the stock. That's why I didn't create any subsequent document for accounting. Okay, so that's the document number that you can see if we use for transfer of the stock. Now if I refresh it here, you will notice that 50 piece will be deducted from the quality inspection and will be added here. Okay, to 99925, 25 will become 75. So if I refresh, you can see it added 50 pieces here and reduced 50 pieces from the quality inspection. So same way you can again do a transfer posting for the remaining 51 pieces if you want. Okay, and same way you using this movement types, you can move that stock from any type to any other type. So documents for goods movement. So as I said before, whenever you create a goods movement, system will be creating a transfer accounting document as I shown you before. Okay, and another thing is a material document will be created whenever you do a good receipts, goods issue and all that. Okay, so what is the function of material document? So for example, whenever if I had a purchase order, then what I did, I created a goods receipt, okay, using MyGo. Okay, then whenever you do the good receipts, okay, so what system will do is system will at the same time system will create a material document for that. Okay, so what is the meaning of material document? So material document is nothing, it's just a proof that a good receipt is done, and just a this document just a proof that who did the good receipt and when it was done, what quantity, what it was used and all that. So that's the material document. You will see that every time is created whenever you do a transfer posting. Like I just did the transfer posting, right? I did the transfer posting and system created this document. Okay, again, why this document is needed? Because this is a proof that 50 pieces of this material was transferred on this date and by this person. Okay, so just a record. So whenever you create a good receipt, good issue, transfer posting system will generate a material document all the time. And from the material document, a accounting document will be created. Okay, again, it will not be created in this case, which I just said. In this case, no FI document is created because we're just doing the internal transfer. It's just changing the stock type. Otherwise, when you receive it from a vendor or issue it to the production, it will be doing the creating the accounting document along with the material document. Okay, so we just covered this one. So material document, accounting document will be created all the time, but exception is when you do a transfer between the stock type like unrestricted, blocked, and quality inspection, it will not be creating any FI document. Otherwise, it will be creating the accounting documents. Now, effects of goods movement. Okay, now what will happen with the goods movement? So whenever you change doing the goods movement, like you've done the good receipt or good issue, okay, what happens? So in this case, when you do the good receipt, that means we created a purchase order, then we done the good receipt. So what are the effects of this goods receipt? Okay, what are the effects of the goods receipt? So let's have a look the effects of the good receipt. So whenever in the system we do a good receipt for a purchase order, right, that means we creating a delivery. We receive the goods and now we want to add the goods to our stock, our own stock. So whenever you do that, create the goods receipt, same time system will update the stock of the material and the value of the stock. Okay, if you receive 100 pieces, it will add the stock 100 pieces to the existing stock and will change the value as well of the stock. Material document will be created, and from the material document, accounting document will be created. Okay, and stock consumption account, all the finance accounts will be updated. Okay, if your system is connected to warehouse management and quality management, they will be updated as well. Okay, purchase order history will be updated. Okay, I'll show you purchase order history here. So if you like for this one, whenever you do the good receipt, if I open an old purchase order, so in the purchase order, you can see a tab here, purchase order history for the line item. And here you can see whatever happened. Okay, so you can see here for this document, this purchase order, only a material document is created. Okay, so even if I open a different one, so for this one, you can see that two material document is created. Sorry, yeah, two material document is created. One is for the good receipt. Other one, sorry, only one is a good receipt material document, but other one is invoice receipt, MyRo. So this document is totally completed, but system will keep the record in the purchase order history. Okay, that a material document was created during good receipt, and this document was created for invoice receipt. And it will also optionally, you can print the output, or you can send a notification like email or something to the vendor as well, or someone, whoever wants to have the output received. Okay, so these are the effects of goods movement. Okay, so that's the end of that topic. Now we'll talk about this is more theoretical topic again. So we'll talk about the invoice verification and delivery cost. Okay, what is invoice verification and delivery cost? So far we have seen these processes: RFQ to purchase order to goods movement and to goods movement to invoice. So let's see, we'll talk about here about invoice. Okay, so we already seen the invoices, how we can create invoices. Okay, so for example here, let me find the right document. Okay, let me try to post. So for this document, you can see a good receipt is done. Now for this purchase order, I will do a invoice receipt. Okay, so we have done it before many times. We'll do it again. Go to Miro, M-I-R-O. And here enter a purchase order number, paste it, and press enter. Enter a date here, so I will enter a valid date here, say today's date, press enter. Okay, so here you can see 3300 for 100 pieces, so you need to enter the same amount here, 3300, and press enter again. Okay, so you can see there is a green light here, and you just save it. Okay, so just if you want to edit the address, it's a one-time vendor, you can say okay, done, copy, and press enter again. And a document is created. You can see in the bottom, this accounting document is created. Okay, so I can click on the document number, okay, or you can copy it, or you can call that purchase order. You can see the link over there. If I call the purchase order history, that's the invoice receipt created. Okay, if I click on this document, right? So whenever a invoices document is created, okay, it will also create further the accounting documents. Yeah, this one. To see the accounting documents, you can click on follow on documents, and here you can see the accounting document that is created for that. Okay, so for every invoice that you create in Miro, system will be creating an accounting document automatically. Okay, and will do the posting on the relevant general ledger account for vendor, for GR or tax account and everything. Okay, so that's the interface between SAP MM and FICO. Now we'll talk about our last topic for today, which is delivery cost. What is delivery cost? Okay, so this is again a theoretical topic again. So what delivery cost means is there are two types of delivery cost. When I say delivery cost, so what is delivery cost? Okay, delivery cost is the cost that is needed to pay when we need to deliver the goods for a purchase order. Okay, so it can be, delivery cost can be like courier charges, postal charges, or can be something like shipping custom charges. Okay, so delivery cost can be of two types. One is your planned delivery cost. That means whenever you created a purchase order, okay, so you created a purchase order for one item, okay, and the price of the purchase order is $100. Okay, so here you added say delivery cost. Delivery price will be say $20 for courier charges, say, and total will be $120. Okay, but that's a planned delivery charges. There can be some circumstances where we don't know the delivery cost in the beginning. Okay, it can be custom charges or can be unknown charges. Okay, so for example, we can say, okay, in that case we can call it unplanned delivery cost. Okay, so as we know that at the beginning we just created a purchase order for $100 and total is $100 again. Okay, but when you receive the invoice, okay, then you came to know that, okay, now they have added say $30 for the shipping charges. Okay, so $30 was the unplanned delivery cost. So basically what we need to understand here is how the unplanned delivery cost is posted in SAP FI. Okay, so delivery cost, as I said, is, you can see the same scenario here. So here you can see there's a planned delivery cost as the unplanned delivery cost. Okay, so in the planned, it was planned that freight charges will be 2 per piece. Okay, but here we don't know what is the freight shipping charges. Okay, but and here in this, the first case, because we knew that this is the price for shipping, so when you receive the invoice was received as per the freight charges and the total price. However, in the second case, in the unplanned delivery, you can see here that because we didn't know the freight charges here, but when we received the invoice, we received some extra price for the invoice, okay, for the purchase order. Okay, so basically what we see here is how the prices will be posted. Okay, so when is the case of planned delivery cost, what will happen is, so you can see here is example of planned delivery cost. So in the purchase order, the price of the purchase order is total is 130, freight is 20. Okay, and same is the invoice because it's a planned delivery cost. In this case, what will happen is goods stock account will be updated with $150 value. Okay, because we knew that from the beginning that it will be 130 plus 20, 150. Okay, and vendor account will be credited with $150. Okay, and in the good receipt clearing account, 130 will be posted, and in the freight clearing account, $20 will be posted. Okay, from the accounting side. That's the planned delivery cost, where we knew upfront that what will be the delivery charges. However, when it is an unplanned delivery cost, that means in the beginning we treated a purchase order of $100. Okay, later on we received the invoice with extra $16 or euro. Okay, so in this case what will happen is system initially will post 130 euro price in the stock account, and later on after receiving the invoice it will add another 16 because of the invoice. It will add another 16 and the vendor will be given credited 146 euro. Okay, so the basic difference is in the previous version, you can see here we knew all the prices in the beginning and the same price was posted here. In the second case, what was happened that we knew that only that 130 euro is the price, but later on we received 16 euro extra. So it will be added 130 plus 16. Okay, so that's the only difference. So that's the end of this topic, and thank you very much for watching this video. I'll catch you in the next video.